Spicita. The first quarter is over. So what do we do? What are the main things that you should do at the end of a quarter, which a quarter, of course, I'm going to say it is after March 31st. So the first 3 months of the year is already happened. And for those of you who are on a fiscal year, for as business owners, even as individuals, even if you got a side hustle, you work somewhere and you got this huge 1099 already this year, and you're like, how much do I owe? Well, last year I told you guys about my rule of 10, right? And so it applies here too, where I say that you should look at your check and take 10% of that and say, okay, are my federal withholdings at least 10% of that? If you have state taxes, you want to know what your state tax rate is. So if your state tax is 4% like it is in Georgia, so is my income tax, am I at least withholding 2% of that? And so same holds true with business owners. You need to do your financials. So at this point, if you haven't had a chance to reconcile because, whatever goes on for you in the first quarter, I know for me, we've been heads down in busy season and ramping up and adding new staff and, just doing what businesses do, grow. And I've had some epiphanies along the way that I'll share with you guys later after, we have this conversation. But what I want to make sure that you guys do in the first quarter, at the end of your quarter, is do your numbers, right? Do your accounting, reconcile. And when I say reconcile, reconciliation is matching what's in your books and making sure that it all cleared the bank. And so whatever did not clear your bank, meaning if you have checks that did not clear the bank yet, you need to deduct that from your numbers, your income. You should deduct that from your cash because it's not available. Or if you have checks that you receive but just have not yet cleared the bank, or they are called deposits in transit, you want to make sure that those numbers are accounted for so you can really know how did I do. Now, even if you haven't received the funds and you may allow payment plans or whatever, you want to make sure that you've accounted for your accounts receivable. And I think that that's a great time to look at who owes you and tap them on the shoulder and say, hey, are they in line with the payment terms? If they're not in line with their payment terms, reach out to them and find out what's going on. Now, it's also a time to look at who do you owe. What's your plan to pay them? And then also look at what assets your business could use. Because at the end of the day, when you do your profit and loss statement, you're going to be in a position to say, hey, Q1, we made money, or Q1, we lost money. With the money that you made, I recommend at least following the rule of 10, taking 10% of that, making your estimated tax payment. Or if you're like, look, I'm making this money now, but I'm going to need it down the road, because that's why you want to assess who you owe, right? Because those expenses could go against what you're showing as profit and loss if you're not on an accrual basis. So I say, take a look at how much you've made, compare that against who you owe, and then say, look, do I need to make an estimated tax payment? Or what do I need in my business and how can I reinvest that into me growing? I get a lot of talk about how do I pay myself and when do I pay myself, and I have not paid myself. And look, if you are a LLC and you're the only owner, or if you are a sole proprietorship, your income taxes, employment taxes, all show up at the end of the year when you file your Schedule C. That's why with this whole PPP situation going on, when PPP happens, they're asking for your Schedule C. Your Schedule C is the P&L that shows how much you made, and even if you paid yourself or not, you're going to get taxed on it. Same goes true with an S corp, but with the LLC, single owner or sole proprietor, that shows up on your Schedule C, and on your Schedule C, you then pay employment taxes just like you paid yourself. So you don't need to cut yourself a W-2 check, but you do need to make sure that you're not going to get blindsided with the self-employment tax. And you say, Spicita, well, what is the self-employment tax? The self-employment tax is 15.3%. That's your Social Security and Medicare. As an employer and employee, both, you pay the full 15.3%. Now, when you are employed, or if you employ yourself through your own business, your business will pay half of that, which is 7.65%, and 7.65% will get reduced from your gross pay, and you'll end up with your net pay because the Social Security and Medicare has been submitted for you and on your behalf. Now, do I have any questions on that? You guys let me know in the comment section. Even if you're watching this on replay, let me know if you have a question about paying yourself, right? Because that is the biggest conversation, the biggest question that I get. How do I pay myself? Well, you've already paid yourself if you are an LLC only owner. But what you need to do at this point, because we're at the end of the first quarter, you need to do your financials. You need to do your profit and loss statement. Make sure that you know how much you made for the first quarter. Now, look at how much you have not yet paid also in the first quarter, so that when you're looking at, okay, I made $20,000, but I owe $10,000 over here. Well, you really didn't make $20,000. You made $20,000 minus the 10 or the 8 that you owe. Let's say it's 8 that you owe, right? So that means that you really only made $12,000, and you should do an estimated tax payment in your tax bank account. Now, if you're a single member LLC, I'm talking to single member LLCs in this moment and right now, and even S corps, if the income passed through from the business to you, you really should have a tax account or a savings account or some account that you're using to put those estimated payments in, so that you can make sure that you're not blindsided at the end of the year. So the biggest fear about taxes, I'm going to tell you guys, is the fear of the unknown. And you probably have heard me say this before, and I say it over and over again. Let's get rid of the unknown, guys. It's so simple. Just get rid of the unknown. Look at your numbers. Look at how much you owe. Look at how much you made. And look at your numbers and say, you know what? I'm going to, at the end of the year, if I'm not going to use this money and I have no other uses for this money, it's income. Now, if you can invest that money as an expenditure in an asset or an expense for your business, is better yet for what I call good expenses, which are expenses that can be also treated as assets when we're looking at funding and getting money from the bank, because that kind of stuff is so important. It's so important for us to know how much we owe, how much we can spend, and how much we should invest it back in our businesses that really can be considered an expense for tax purposes and an asset for business purposes. All right, that's what I got for you guys. Pay yourself. And if you guys have any questions for me later in the day, or you're watching this on replay, let me know in the comment section. Send me an email. You can also send me an email at spicita@taxplus365.com. I hate using that email, but it seems like so many people have been sending me emails there randomly. So I'm going to start merging it and checking it. Y'all have a blessed day. I'm Spicita Jackson, the accountant you want to work with when you want to move your profit up and take your taxes down. Y'all have a blessed day. I love y'all. Bye.